I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the last week and a look forward at what might happen in the coming week. Well, this was a week that saw pressure on the stock market during the middle of the week based on, well, it happened after the FOMC inaction in the previous week, and investors seemed to be quite disappointed by that. And on Thursday, that was the day that maybe the big event for the week, as Janet Yellen spoke again. She was doing a lecture on the dynamics of inflation and about monetary policy. And in there she said, well, it's likely that they'll still raise rates in 2015. And to me, you know, her giving a lecture, or anybody on the FOMC giving a lecture about the dynamics of inflation and monetary policy, that's a little bit like, well, Harry Potter giving a lecture on how to use a magic wand. Really, because, well, the FOMC's action, their whole policies are, well, based on fantasy, Keynesianism, and that's why the world is in trouble right now. So what we saw was the stock market move lower during the week, and then on a little bit of hope, or certainly a little bit of sense that it got pushed on a little too far, we saw the markets bounce, led by Europe, and then the U.S. markets open higher on Friday, gave some of that back, but still a better day, at least so far as I'm doing this recording. Overall, been another choppy week with commodities pretty much remaining under pressure, and the only one was gold that was better and actually took on a little better short-term picture, and we'll look at that towards the end of the show in the short-term view of the week. This show, by the way, a great interview coming up with Mercedes Esterman von Essen as we look at how fear gets triggered and how it affects our lives in trading. I think you're going to enjoy that really excellent interview out of the UK from a great coach. And also we'll answer some of your questions and do the short-term view of the coming week. So nice full show. I think lots of stuff that's going to be great for you. Let's take a look here at what happened in this last week as we put up the 60-minute chart, a 24-hour chart that looks at overnight trading and those items that were influences in the market. So here is that chart, and you will see that there's, well, lots of information on there as we look at these different fluctuations in the market. And if you watched my show last week, what I anticipated was that there'd be a decline into somewhere around midweek and then turn up. And well, we'll call that nearly a bullseye. The low came a day later than I expected, but overall, I'd say the timing was pretty good. So what moved these markets? Well, on Monday, we had some news as world markets were firmer overnight as Tsipras won a snap election in Greece. And interesting how the voting went, as so many people didn't show up to vote. So Tsipras wins with 35% liberals, 28% conservatives, and 7% votes go to the Nazis. Imagine that. So yes, a pretty weak showing for a man to survive that snap election. Existing home sales, they really got hit, 4.8%. So while we had a rally coming up during the morning overnight, those decline in existing home sales started to hit the market, and you could see there was a midday dip in there, but then the markets firmed up during the day. Goldman analyst said he expected S&P 500 by year-end to be 2,100. I better look at those numbers again. He said that, well, not he said, but Lennar had very upbeat, strong earnings and revenues. That's that Pandora spike in here that we're going to talk about in just a few minutes as I go over the best of the week. And that was a 14% spike on a rumor, and ended up 6% on the day. Sears up 4% on a new president. Lulu up 4% on an upgrade. GoPro down 7% as Barron's compares it to BlackBerry. You know, that would be a company that has great products that competition just simply runs over. And the biotechs crack 5%, and that also was part of this decline in here, as Hillary Clinton says that specialty drug companies, that's the biotechs, are gouging. So aiming at those drug companies, and I'll mention a little bit about that later on in the show. Tuesday, overnight, well, the markets are kind of quiet through the first half of the night, but then news comes out about the China GDP, and it's downgraded to sub 7%. I'm going to downgrade it to sub 4% because I don't believe anything they're putting out there. Eurozone down 3%, and Asia is relatively quiet. This also helping this big decline in here is this Volkswagen emissions scandal, which then really hit Volkswagen for a few days. Commodities were in a broad sell-off. Miners very weak in Europe as the Eurozone got affected by that. Here in the U.S., down 5 to 8% as they led the market lower during the morning. You could see right in here. And then later on the day, there was a recovery in here. Carmex down 7% on a big revenue miss, and Mosaic down 6% as they cut their production and outlook. So pot to the downside, going to pot. On Wednesday, we see that the markets overnight were weak early on, but then the Eurozone comes out with better data and reverses to the upside. Eurozone ends up 1 to 2%, China down 2% on the day on a weaker PMI. U.S. futures, they had this wide range overnight that you could see right in here. Then they end up going lower into midday. Oil down 4%, really beats up the energy sector on Wednesday. And Navistar down 7%. Well, they're talking about that Volkswagen might have had interest in buying that company, but now with Volkswagen being under heavy pressure, the odds are less on that. And Bill Gross, the bond maven, comes out and said, Fed should hike now. Well, there's a voice that I'm in line with, and in fact, the Fed should have hiked years ago. And so he's getting just caught up with, well, me. World markets again fall overnight on Thursday, and you could see this big decline in here as the markets open sharply lower. Japan down 2% as they get back from the holiday. Eurozone down 1.5%, and China puts on a little rebound. Goldman comes out, says copper glut to last 4 years. Well, that's not good news for commodities. And Yellen, she was due to give her speech after the close, which did happen, and I mentioned that. She talks about inflation dynamics and monetary policy. Well, you heard my comment about that. The durable good orders came out weak. CAT down 7%. And that weighed on the market early on. You could see right here as they cut their outlook and 10,000 jobs that they're going to cut between now and 18. That's about 8% of their whole workforce, 8 or 9%. That leads the U.S. stocks lower. They were down 1.5% early, but then they did turn up and have this nice reversal in here on Thursday. That is what we were expecting to happen. The mining, manufacturing, and energy stocks were all down hard early on, but they came back. Gold stronger as that pattern did improve, as we said, and gold and bonds were really jumping in a safety bid on Thursday. Friday comes, the Eurozone, well, it soars 3% plus. Asia kind of mixed. Japan, they report they're back in deflation. So there's another vote for another Keynesian following leader with Abe and his Abenomics, which is a total mess and a total failure, and no hope to get Japan back into growth while the government is trying to influence it rather than allowing organic growth to come, and whatever happens, happens. And Yellen, well, she talked about a rate hike likely in 2015. That gave the stock market a boost, but U.S. GDP up 3.9% rate. That was revised up from 3.7. So here we are with a 3.9% growth rate in the U.S. Of course, that's based on zero interest rate policy, and 5.1% unemployment rate. So you got to say to yourself, well, why are we at 0% interest rates? Now think back. If I would have possibly said to you back, let's say 5 years ago, that in 5 years, in 2015, we're going to have a 3.9% growth rate, and we're going to have a 5.1% unemployment rate, headline number, and I said to you, we're going to have 0% interest rates, what would you have said to me? You would have told me I'm a moron, but exactly where we are right now. So something is very, very messed up. Anyway, the big mover on Friday was Nike, and that stock has 8% gain, and they had a huge beat on revenues, and that one will save to show you the chart in there in the best of the week, and that's, believe it or not, on big sales gain in China. So they did really well there. The next thing that we're going to look at in here is the calendar for the coming week. That's what we always do right now. We have a little different calendar as we put on all the earnings reports and put on the news items, the coming economic events for the week, and that is right here. So here is our economic and earnings calendar, and very little in the way of earnings coming up this week. Tuesday has Costco and Walgreens. That's Walgreens Boots. That's their symbol if you don't recognize it, since they bought Boots in the UK. And Thursday is Micron after the close. So those are the only earnings reports that we really have in here for the week of any consequence. As far as news goes, kind of light, not a lot in the early part of the week. We'll get Case-Shiller on Tuesday. That's not really a market mover on the home price index. Consumer confidence can give you a little bit of a move in there, but the beginning of it is really on Wednesday when we get the private sector employment report. That's the ADP number, and then we have some manufacturing PMI ISM coming out on Thursday. But this is, of course, the big mover of the week, the unemployment situation. And can you imagine if we are in a situation where the unemployment rate is even lower than it is right now, and we still are at 0% interest rates? Like I said, something is seriously messed up. Anyway, that is the opening segment for the week, and we'll be right back with the best of the week. Well, with sellers in the market most of the week, in fact, a pretty bad downside move into the middle of the week, pretty hard to pick out what were the best of the week. In fact, the best of the week were stocks that just simply didn't go down all that much. Investors simply saying WTF to the FOMC, like exactly what are you doing? Do you even know? And so investors, after Yellen failed to raise interest rates last week, brought the sellers out. Like, what exactly do they know about how bad things are? And I think the investors were pretty disappointed by that. So we saw the gold stocks get a bounce early in the week, but even those stocks, which got hit in the very beginning of the week, we're only getting a recovery back, and so no big moves there either. Only a couple stocks to look at here for the best of the week. One of them from the beginning of the week and one of them at the end of the week. The first one we're going to look at is Pandora. Here is that Pandora chart. And you can see here that even though it had a nice size up week right in here, you know, my projection is really for a correction. If we look at the daily chart in there, what really gives it the best of the week is that, well, it had this big up move there and has basically held most of the upside move. That big up move was based on the fact that, well, there were rumors out that there was a royalty settlement coming that would be favorable for them. And then on the next day, right over here, they made comments that, well, their appears to be no impact by Apple Music. So all of that and some discussion of record level of royalties for them has brought some buyers back into the stock. But as you saw by my pattern on the weekly, I don't really think this one is going to hold very well. Have to say the absolute best stock of the week is Nike, NKE. Here's the chart in there, and you could see a big upside gap. This big decline that it had on that Panic Monday down to 94.5. Again, we don't know what real numbers were in there on that day, but it's since recovered and then had a little flag pattern there after turning into bullish momentum. There's the slim ribbon turning bullish right there. And this, we'll call it a rectangle, and then the news comes out and a blast to the upside. Right now up over 9%. So big gains there in Nike for the day. So that really is by far the best stock of the week of the about 330 stocks that I follow. So for the coming week, what I usually do is kind of look at the patterns and say, well, where's the highest probability of getting some upside for the best stocks of the week? I've got 5 stocks to mention here, and I got to tell you, not overly excited on any of them, maybe a little bit on one of them. Triple M at support, that one looks like it has a pretty good opportunity for a bounce. Yahoo, I like the location on that one. I think that one potentially has a bounce, especially if we get some bounces going in China in the next week, and we're looking for bounces this week, as I'll talk about in the short-term view later on. So the next one is KBH. Now that one, I really like the pattern. Now in the area of high 13s to low 14s, I think that is a very strong location to be entering on the long side. And call me crazy, but 2 stocks that I think have upside pops coming in them. One is Twitter, which I happen to be long right now, and that had a hammer on Thursday, coming back and testing those lows on Friday. And the other one is GoPro. Both of those look like there's some opportunity to get some upside in there. But again, these are little short-term swing trades. These are not anything all that excited about. KB Home is the only one that I would say I'm excited about. And that is the best of the week. Well, contrary to the best of the week, where it was really a struggle to find things to look at, the worst of the week is a lot different in a week that has had a pretty big downside swoon in midweek. And that's all during a zero interest rate policy. We're having this stress in a lot of stocks and a lot of markets. Amazing how many companies have come out and voiced difficulties. And we're going to look at some of those right in here as we look at, well, the worst ones of the week. First one we're going to look at is Mosaic, MOS. Here is that chart, and here on the left is the weekly, on the right is the daily, and you can clearly see that this stock, well, it's taking a big hit. Now, it's getting down to where we thought there would be some kind of a low in here. Why is this stock under so much trouble? Well, cuts in production, cuts in outlook, and the farmers under huge stress. Simply because grain prices are really low. So Mosaic, which is an agrochemical, is expecting sales to be soft, and they are soft. At some point it gets to be crazy, and I think we're in a bouncing area in Mosaic, but you could see by the way this traded in this decline, this is, well, certainly one of the worst of the week that we're going to see. Pretty bad looking pattern in there. Caterpillar, they also cut their outlook and are cutting 10,000 jobs. That's like 8 or 9% of their workforce. And this stock just has been in a horrible pattern. And the cyclic pattern suggests that it doesn't end until December. So this is a really bad looking pattern. And here you could see on the daily chart, look what it did on Thursday here in this big break. And that certainly puts it in the category of the worst of the week. So down Thursday, down 6.27% on a really bad chart. Of course, when you have that happening, you have Deere moving to the downside. Joy has already been really hit so hard, the stocks in that manufacturing category. So bad looking group there. And again, they've come a long way to the downside. Wouldn't be surprised to see some bounces. Other stocks that are in this category of worst of the week that we're going to look at, we've been cautioning about Expedia and this group of online travel, and they really have been stocks that have, I think, set up for some good sized declines. Some of them had very big declines, and we'll take a look here at Priceline, which this stock looks to me like it's got still some decent amount of downside in here, and this stock have to look at here on the daily to see, well, just moving down from 1310 all the way down to 1255, so pretty good point loss there in there. But I want to look at Expedia, because that's really why I put this up, because I want to stay in this group. Sorry, EXPE, there is Expedia coming up, and we talked about this, that they had gotten this OWW Orbitz takeover approved, and that was this big pop. You had this Harami shooting star, and we had this on our list a couple of weeks in a row as potential for some big declines, and there you could see it really takes a hit. So this also in the category of the worst of the week. Two other stocks that we talked about, and one of them is Boeing. Now, we talked about this one being in a sell area. Now look what it did in here, as it just moved down very sharply from that area where that dark cloud cover pattern occurred, and then this shooting star that's in there all the way down to, well, trying to get to that support there. So Boeing was another really bad one. Goldman Sachs had a bad week also, as well, Lloyd Blankfein unfortunately was diagnosed with lymphoma, and supposed to be very curable, and but that stock had a very big decline after that news came out. But really the news in this group is that there is likely going to be a difficulty getting profits in trading, and when you look at trading profits being tough, and an environment where maybe M&A isn't that good either, these stocks and investment bankers could begin to have a lot of trouble. One more we're going to look at in here. I've had questions about Amazon, and Amazon is a stock I've been bullish on. Let's take a look at this weekly chart first, and you'll see a very nice upside tick in here, and this is in this positive phase, and it's been doing great. Now, I've been bullish on this stock and looking for it to get into the high 500s. I'm actually still looking for that, but I think there's a trip to the downside in here first. You can see in here that it actually failed at the top of this resistance and then started to come down. We're going to look for like 510, 505 in October in this declining phase right over here, and that'd be our buy area for the pop up here to that resistance around 580. So we'll look for a little pullback in Amazon as it started to come back this week, but then after that I think it's going to be a buy. So that's the stocks that really were the worst of the week, took pretty good hits during midweek. Want to mention about some stocks in here that have some potential for the downside. This is going to be probably a week where we see some upside bounces coming in this next week, some attempts at that anyway, but the group to me that is setting up the most for the downside, or the highest probability, are the HMOs, hospital stocks. I specifically want you to look at for the downside Humana, HUM, Cigna, SCI, and United Healthcare, UNH. They have bear flags, and those are patterns set up for the downside. Now, Hillary Clinton came out and beat up the biotechs, as she's aiming at anything she can to boost her polls and make the people think that they're going to pay less money for health care, get that under control. Well, she's got to be aiming at the HMOs also, if that's the case. So I think that that group has got sellers in there, and we're going to look for some downside in there. So that is the worst of the week. All right, we're back, and this is Market Pros. This is when we bring great people that are involved in the markets and talk about some very important things. We have a return guest today. We have Mercedes Esterman von Essen, a trader, been a trader since 2001, very active in the markets, a trading mentor, success coach, and author of The Buddhist Trader. Mercedes, we're going to welcome you back to the show.
Thank you, Slim. Lovely to be back.
Yeah, we had some great comments about our first time you were on here. People really loved having you. And since then, we've had a little discussion about what some of the best topics might be to discuss about being involved in the markets. And a couple things that came up from our original discussion that we thought were great for now would be really talking about fear and how that affects us in the markets.
Yes. Fear is a big thing for all of us at the moment in particular, I think.
Yeah, we have a market right now that has turned down again, and this market certainly is bringing up fear at many different levels. Just want to talk for a second about my own fear and how that's affected me in the markets. Everybody, of course, is affected in different ways when it comes to fear and how they react to it, the behaviors that they design around fear. For me, my fear was always not measuring up. I've been very transparent about this as I've done all these shows for the last 4 years, and the way that I designed behaviors around my high fear level was really about being super aggressive, but really needing to super achieve and doing everything I could to make big sums of money at the risk, of course, of losing a lot of money at one time. And of course, I've done that many times in my career as I've been a very volatile speculator. So I want to talk about, how our, history, how events in our history bring up these fear and how people then react to it. So I'll let you take it from there.
Yes, actually, let me say what you say about your own fears. I can certainly relate to this because I have been extremely fearful, still am today at times, and it takes me by surprise sometimes when I observe how fear takes me over. And what it does for me, and I know that's the case with many other traders too, it stops me from placing trades. Why? Because in that moment when I go into fear mode, I simply do not see what I should be seeing on the charts. So, and that is, by the way, by no means unusual. A lot of traders will, out of fear, not be able to push the button. And that is not just hesitation. It is simply because the brain cannot in that moment see what's on the screens, because when we go into fear, the fight or flight responses get activated, and that takes all the oxygen out of the frontal cortex. The frontal cortex is that part of our brain that allows us to execute a trade flawlessly, more difficult at the moment. And it literally can freeze you in space and time. You end up very similar to the old rabbit looking into the spotlight.
What I call that when I'm talking to traders is essentially emotional flooding. It's just so much is going on in our brain and so much emotion that we essentially can't see anymore. We're turning off all ability to visualize and forget about our intuitive processes.
Well, very much so, because you see, one thing people do not realize, fear is actually and has been a very necessary emotion. It's a survival mechanism. It's a part that actually has helped us since we have come into being as the human form, if you like. It has helped us to survive to this day, because we have been living in a big cycle where the dominant means of existence was survival. And survival has become our dominant operating modus operandi. However, now we are entering into a very different cycle, which has had its official origins in 2012 well, really, it goes back further than that, but we won't go into that right now. Suffice it to say that we are now in a cycle of self-actualization. Many of us don't know how to deal with that, let alone know what it means, because we are still being held back by the old, deeply, deeply embedded fear-driven mechanisms, which are basically about our survival. And that old survival cycle is interfering, or appears to be interfering, with that new cycle, that cycle of self-activation that is coming in. And you can see that in trading, we can see it in our personal lives. You see it as we evolve. It's one of the reasons why we have great problems changing and evolving from one level in our evolution as traders, as investors, as people, to the next. And you can see it in the world. It's happening in the financial world, where the old energies are fighting with the new ones, and that ensuing overwhelm, which we are experiencing in ourselves, is being reflected, of course, again, in the financial markets, in the political system. It's everywhere. It's all pervasive. If we talk about Syria, wherever you look, it's there. And we are at a point where we cannot deny it anymore. It's there. We can't say, well, let's put on our rose-tinted glasses and do something nice.
You know, you bring up the subject about historical events and fear. You know, when fear comes in, and you were really talking about going all the way back to the instinctive reactions of the primitive man, it's also, you know, our own things that we've learned, events that have happened in our own life, like just, you know, how our parents react to us when we did something wrong and there was a consequence. So we reacted, we develop a behavior around that, and that behavior comes forth in our adult life and contaminates many aspects, especially trading. You know, I did a special in my member section that I think is, I'll do a little self-promoting here for a second, 16 signs that fear is contaminating your trading. It's a great piece for people to see if they want to become a member in the site. So you made a point just a second ago about fear in the whole world of everything that's going on. We have the markets moving down significantly. And let's talk about a very, very important point that you brought up to me, and that is distinguishing the difference between this collective fear that we're seeing in the markets here and this reaction, and our own fears that come up. And, you know, the benefit of knowing the difference between that and the signs that we might look for.
Yeah, and you just mentioned an important point in this respect, because you see, we have these learned conditions from our parents, who in turn have learned things from their parents. And so we are back into that old, deeply embedded behavior that is driven from a survival, a need to survive. So every time we get into these fears, which are massive, they are in the morphogenetic field out there, our own stuff gets triggered. Now, the mind has got a funny way of thinking that everything it reacts to, is reacting to, it's personal. It is its own history as a human being, and therefore there is something wrong with us, and it needs clearing, it needs sorting, which further drives the mind into complete overwhelm. So in actual fact, when we become aware of this, and this is why it is so important to understand the nature of evolution, where fear really originates from versus our very own fear, because it's something very different. So if we learn to decouple from the collective, and if we learn to decouple from our history and literally see ourselves like, shall we say, a satellite that is floating in space in infinite possibilities in quantum language, then we can at least get a sense that allows us to set a reference point in the mind that there is nothing out there. If there is nothing out there, we cannot connect to the fear. And actually, in one of my guided meditations, there are some meditations that do exactly that, create that reference point where you are free from all this. And the more you practice that, it doesn't take long, just a few minutes, you over time develop a sensitivity to the energies out there versus to the energies which are inherited from your parents, and then your very own fear energies. And you will actually find that what you personally have in terms of real fear is very, very little. You will find that by and large, you are just reacting to the conditioned stuff. As you said, your parents taught you certain things, and it's all in there, been going on for generations, and that is the stuff that needs clearing. And how do we clear it? By learning techniques that make us aware of what is going on inside us.
Before you go into the techniques, what I want to do is talk about get a little clarity around what you just said, in case anybody's saying, wow, that was some deep stuff. What I'm hearing you say is that it's really important for a person to be able to distinguish and separate them from that which is going on around them and where they get wrapped up in that collective fear versus that which is real for them and where they may be actually disconnecting from realities of healthy self-identification and really getting stuck in all of this other stuff that's going around them. Is that right?
Absolutely. The reason we identify with something is because we are immersed in it. And anything that is illusory, delusory, which appears real to the mind, is due to immersion. There is no separation, in other words, between us and the so-called reality out there. In development terms, there is a thing, it's called oceanic oneness. And that refers to when the newborn baby comes into this world, it has no concept of between you and I, the world outside of it, and itself. It has no concept of there is a hand, a finger, an eye, or whatever. And that only develops over time. And by the way, that is all explained in detail in the Buddhist Trader. So the same is true for the evolution of consciousness. So whilst we are in immersion and believing in the illusion of fear, believing that it is real, we are still in the state of oceanic oneness in terms of consciousness. So
let's talk about the different techniques that are possible for us to do to separate ourselves out from this collectiveness into a higher level of self-awareness so that we can connect to the greatness of who we are, and rather than focusing on the fears which are really blown up from a reality from a different time in our life. So what are your techniques to make that shift?
First of all, there is guided meditation, and I place great emphasis on guided meditation, not just any meditation per se, because that can lead to all sorts of other problems if you allow the mind in a theta state, that is a deeper state of awareness, to wander around freely. That's an entirely different discussion. So guided meditation that helps you to become aware at a deeper level of how you react to things. When you go into these deeper states of learning, you are side-passing judgment and conditioning, and that allows you to see, if only momentarily, how these things originate. And in that moment, you are creating separation from yourself versus what has been impregnated into you from the outside. Another technique is a technique called EFT, Emotional Freedom Technique. It's also in my book, The Buddhist Trader, and also in the Stop Procrastinating program, where we are addressing our common core fears. And all traders have got common triggers. And it's what you described in your article on your site, which is it helps trader to see what they are. So EFT is a very, very powerful tool of getting rid of the emotional content of that fear, and in doing so, that then enables you to further detach and come out of the state of immersion.
Could you just say a little bit more about EFT, where somebody would go to learn some of that and what it actually does?
Well, actually, EFT is a process whereby you speak out loud certain, you acknowledge a problem you have, then whilst acknowledging it, you are tapping on a few main meridian points, and then as you tap on the meridian points, you give yourself permission to set yourself free from the emotion and see it from a different aspect. And you keep tapping, and whilst you keep tapping, it clears the blocked meridians, and in doing so, it opens you up to new insights. And one of the insights clearly always is that the stuff we have, it's an illusion. Every time we have a intensity of negative emotion, it is always an incorrect thinking behind it, and EFT allows that to clear up. I think there is actually on my YouTube channel, I've shown the basic EFT process. I've also developed a shortcut to it, which I termed micro EFT. As I say, it's certainly in the Buddhist Trader and in the Stop Procrastination program. Maybe I ought to do another video or something, or a blog on how it works, because it's really, if people can be bothered to do it, it's very, very, very effective and very easy to do.
I'm smiling as you say that, because I'm realizing more and more as we have discussions how we come from very, very different areas of learning, and there's so much crossover to what we do, because I essentially have in some of the workshops that I've done, we have a process that's about dealing with certain emotions, fear and shame. And what the process is about speaking things out loud so that we can realize that we give them extraordinary weight. That which should have the weight of just a pebble has 100 pounds of weight as we lug it around. And the more we get it out in the open and speak it out in the open, we realize that, we give it, there's a reason we give it too much weight, because we think it saves us, but truth is it really hurts us.
Yes, and at some point, when you overemphasize it, it almost becomes ridiculous. And I've done a similar process. I've done it in seminars, actually. And at the end of the day, and certainly by the second day, people would sort of, over a glass of wine or so, start doing these processes with each other, and it became really utterly hilarious. And that is so freeing, and so, well, it's illuminating, and also really, really sets you free.
It is. What's really cool about it, and when I've done this process, I've seen similar things, is that all of a sudden people are shocked that when they expose these things about themselves out in midair, that nobody's running away from them. Nobody's judging them so harshly, and they thought that they would.
Yes. Oh, yes, absolutely. Yeah.
Yeah, it's great stuff, great stuff. I want to move on here before we run out of time and ask you about the ways to do these guided visualizations, resources for that, because people are wondering, okay, guided visualization, somebody's talking to me, but where do I get that? How do I listen to those, and the right ones, so that I'll be able to work through my fears or other things?
Well, I've developed, and here, a lot of self-promotion going on here. No, but I'm saying this truly because it really, really works. I've developed this little process, and it starts out, you are imagining a figure eight, and maybe at some other time when we do another video, I'll do a process, demonstrate a process, if you like, if people are interested. And so what the process does, of course, the figure eight is the figure of infinity. So it connects us at a very deep level to the truth of our being, which is infinite, because we can create what we want to create. Our conditioning stops us from that. So we use the figure eight to connect us to the truth of infinity, and then it's used in different ways to shift energy through the body. So of course, when you shift energy, you cannot help but shift perception. And
right.
This is done in a guided way. The reason I say a guided way, because the untrained mind, if it goes into meditation, can go into all sorts of areas which may not be good. And it can bring out fear, it can bring out incredible mental overwhelm that can make people ill, and that is something.
Now, there's a lot of people out there that love meditation that are going to say to themselves, well, no, I do it all the time.
Yeah. I mean, meditation is a great tool, but you need to gradually learn how to do it and learn how to direct your mind and how to direct energy in order for it to be efficient and bring positive results.
Right. And one of the important things about meditation is to allow everything in and allow everything to pass, so that you don't start to take on emotional reactions to what you're doing in the meditation. Yeah.
But you see, that is the thing, the passing bit, that is where people have problems with. Allowing everything in, hey, we all can do that. It's no big deal. Right. We are doing it every time we go into fear and into overwhelm when we are sitting in front of our screens.
So I want to do a little quick summary of what we've talked about here. We talked about, the conditions of the markets and how that comes into our own fear levels and being able to distinguish those differences. Talked about some techniques about getting a deeper sense of that self-knowledge of how that works on for us, how to clear some of that old stuff through some guided meditations and through EFT, and also talked about the fact that you and I have done some similar processes that in different ways have really focused on the same things. So before we wrap up, anything else to share? Anything else going on for you that will benefit the traders right now?
Yeah, I mean, I would say we are right now at an energy window. Mercury has just gone retrograde. It highlights everything that needs working on. It's a very, very good time, while it may feel a little uncomfortable because the energy is slowing down, and that brings things to our awareness and often stuff we do not want to see. So from a cosmic, astrological and astronomical perspective, there is a lot going on here at the moment. So use that to do a little bit of inner work, because it will stand you in good stead in times to come. And also you can read a summary of what we just talked about fear on my blog. I've written an article with our talk in mind, particular for readers to revisit.
That's thinking ahead.
And take it a little bit deeper.
Great. And your website again, thebuddhisttrader.com?
Yes.
And your book, a great selling book on Amazon.com, The Buddhist Trader.
Yes, The Buddhist Trader is also available on my website, and so is Stop Procrastinating and the guided meditations and other things.
I love having you. I know that I said that last time, but we have so much synchronicity in the things that we look at and do that I'm looking forward to the next time.
So am I. I love being on your show. Thank you so very much, Slim.
That's great. So anybody who wants to contact Mercedes, they can do that through her website. Any comments or questions about this show that we've done here, please send them to slim@askSlim.com. Mercedes, wonderful. Can't wait. We'll see you again next time.
Thank you.
All right. Take care. Bye-bye.
Bye-bye.
It's never really a surprise to me when I get a lot of emails about a trader psychology piece. Had a lot of them, great comments about the segment that I did about the 4 agreements. Really fantastic book. So those of you that haven't seen it, go see it. DK writes me, he says, that trader psychology piece, another home run. It's a small book, he says, but it has immense power to weight ratio. Man, I love that statement. By the way, great demand for the bookmarks. I ordered a few extras because of the demand, and now I have a couple left. So anybody wants those bookmarks, send me an email with your address. I'll be glad to send that to you for members. The next email is from ML. He says, I really enjoyed your IRA MO piece, very thought-provoking. He says, you're an excellent teacher. Well, thanks for that. He says, I need someone to educate me, but I want to make my own decisions. You know, I really live by that, because what I do is I share my wisdom. I share everything that I've learned pretty much openly for 41 years, and a lot of things really openly about my past. I'm pretty transparent. My goal is to do that so that you can make your own decisions and therefore take ownership of your own trades. That's one of the keys. You know, a lot of people out there listening to a lot of people, but if you don't own the trades, you're not responsible for the trades. Trades are going to get away because, well, you're wondering what they're doing. So important, and great comment. Thanks for that. KMV writes me, this is a good one. He says, what are the correlations between the dollar and gold? You know, have a lot of people, amazing how many people write me every week about gold. Gold, GDX, GDXJ, and get tons and tons of letters about that. So we're going to look now at this this gold chart. It's kind of a funky looking chart. It's got a lot of lines on it, so I'll try to describe it to you. And what I'm going to show you is essentially that, I mean, as you would expect that there's an inverse correlation to gold and the dollar index. So here is that chart, a GDX, GDX / DX versus the / GC and a long-term weekly chart. And here you go. So what we're looking at on here are the big cycles on the dollar. Those are those big curve things that you can see on the bottom. And the dollar is a strong determinant to the price of gold. And it seems like every time the dollar has had, well, a big decline, you could see that right there. Well, gold had a good rally. This gold rally on that decline was 22%. This is another cyclical decline right in here. That's gold going up right here while the dollar's going down. 73% rally right there. Here's a couple of big declines in the dollar right here, where gold, you see, had a big rally right here. And on this one, it actually rallied 41% while the dollar fell. So we're looking only at dollar declines at the moment. And you can see in here, well, this one, while the dollar fell, gold actually struggled. It had a couple little rallies in here, and gold actually in this rally, while the dollar was falling, managed a 25% rally right there. So we saw that there was a kind of a decent rally at that point, but overall not a weak correlation. In fact, we'll call it a strong correlation. So how about time periods when the dollar is strong? How does gold do then? Well, I don't have them labeled in here, but the correlations are not always perfect, but we'll take a look at here. When this dollar was strong right here, well, here's a period that gold rallied right with it. So gold was strong with a strong dollar. You can't really always count on that correlation. Here is also a period on here where the dollar was strong. Gold took a big hit, but then actually rebounded with it right there. So when the dollar goes up, you don't necessarily apparently get declines in the gold market. Take a look at this period right in here. We got this strong rally in gold. Actually, you had, I'm sorry, that was in the dollar. You had this move up here while that was going on to that all-time high, but then the gold market started to roll over right in here. So where are we right now? Well, first of all, what we said is that almost all the time when you get big declines in the dollar, you get big rallies in gold. It doesn't seem to be as consistent in the other direction. But right now, let's take a closer look on these patterns, and we are now in a period where it looks like the dollar decline is about over with right there. Gold, you see, had been declining also in there and still is apparently quite weak right along with the dollar market, apparently weak together. Now the dollar is getting ready to be in a stronger period right here. That may or may not be a good period for gold, but historically, based on correlations, if the dollar is strong, I would not bet on gold. There are times when it does go up with the dollar, but I don't see that now. And I'm going to, in a little bit, I'll take a look at the GDX pattern that lines up with gold, and you'll see that, you know, gold doesn't actually look to me all that powerful at the moment, even though we've been getting some buying days in there on inverse correlations. So that is a look at the chart of the DX versus gold on a weekly basis, and overall mostly strong correlations, but not all the time. So we'll take a look now because we have a question about the GDX cycles, tweet actually from Judd Liliha, who sends me some great stuff. Hey Judd. So the what we're going to look at here is the GDX, and he asked me about the GDX cycles. So take a look here at this chart on GDX. So there is a major gold cycle that lines up pretty nicely with this pattern in here also. So you can see this is the gold cycle, and when it declined in here, GDX, of course, the miners got hit. Gold got into this rising phase, and the miners rallied. So now what we have is a very, very similar pattern. Now in gold, we have a rising pattern going on right over here. But the GDX, the miners, actually have a declining pattern going on. So the miners are much, much weaker than the gold market. They both point to a bottom somewhere over here towards the end of the year. So I actually think that we're going to see some additional weakness in the gold market, and that the miners will continue to struggle all the way out through the end of the year. And it would take quite a rally, I think, to change that scenario that we have in place right now. Next email was from CM. Said, really enjoy your content. When are you going to do a video on the MCI? He asked me. And the truth is that, like you said to me also, all members would love to see that. I am working on a video that looks at slim charts and the MCI, two separate videos to be available to explain how to best use slim charts and the market condition indicator, which is one that I developed, and all the people that subscribe to my charts for 3 months get that indicator as a bonus. So I'm working on that. CM also asked me, what's your view on Tesla and Facebook for October expiration? So I'm going to look at those two charts right now. The first one we're going to look at is Tesla, TSLA, and what I said to him about this is that Tesla is in an upward bias. Now it got a rally up into the resistance zone, and then has started to falter a little bit. All this announcement about Apple coming out with an electric car, well, the question is that going to make a big difference? So far it's not, and Tesla has been strong in here. So here's the pattern that we're looking at in here, and you can see the cyclic action as I complete these envelopes right in here. You'll see how that lines up with these important bottoms. Beautiful. And then this one came really early. It actually came about 3 weeks earlier than we expected. So that actually had us miss this rally, darn it. So now it rallied up into this resistance zone. It's still in a rising phase. It has really been, avoiding any real downticks, in spite of the fact that Well, Apple's going to have about twice as many people working on their electric cars already than Tesla has working on theirs. So that is a big question mark out there. You can see this big resistance zone. My gut feeling when I look at this is that that resistance zone is going to be meaningful, and that you could see this pattern right in here, that it's likely to roll over in this resistance zone at some point, have a correction, get down to some support level, and then try one more time out over here next year. This question, of course, is how much will customers like the new model that they're coming out with, that SUV with gull-wing doors. It looks kind of like an ugly duckling to me, but it's an expensive car, like $120,000, so that's not their big winner. The thing is, their Model 3, which is supposed to come out in next year, I think in the spring or summer, which is supposed to be a $35,000 starting car. Now, they're not making money on a $100,000 car. How are they going to make money on a $35,000 car? I don't know about that, and it might be a long time before we have them making any money. And with other people, like other companies like Apple starting to go after them, got to really wonder what the longer term prospects are for this stock. I think maybe it trades close to 300 some point in here in the next several months. It's trading 263 now, but then I have a feeling it's a $150 stock after that, just because of, well, the competition, and because how are they going to make any money on a $35,000 car? That's the big question. The other stock that CM asked me about was Facebook. So we're going to put that on here right now. Here's that Facebook chart, and that will show us that, well, it's got kind of an odd pattern that we're looking at here. This pattern, when we look at the cyclical pattern, helps us see that, well, it's this kind of rhythm. You could see that right in here, and then this rally that you could see right in here, the break. But this break was really early, and it had, wow, a monster bounce. All of these numbers, we don't even know if they're real because of that flash crash Monday morning. So very, very difficult to tell there. So what we're looking for, you could see, as we've gotten up into this resistance zone, is probably moving back to the downside in here. We'll call it mid-80s. And then after that, probably getting into this rally zone, and then another shot up here in November and December. So you asked me about October expiration in here, and I would say that both of these stocks that you asked me about, Tesla and Facebook, look like there's a potential pullback, and that's what I'm looking for in the stock market also. I'll talk about that in a couple minutes, into October. So then after that, I think we were in for another rally period, maybe the longest one we've seen in a while after this big correction that we've gotten into. All right, so KMV writes me also, wants to know about three stocks: PayPal, LinkedIn, and Qualcomm. Well, PayPal, too soon on that one. There's not enough data for me on my style of analysis, so couldn't really give you anything on that one. The other two you asked me, I do have information on. Now, I told you Qualcomm looked like it was trying to put at least a short-term bottom in. Now that has turned a lot weaker. Let's take a look here at that chart in QCOM. And here we go, bring that up, and you could see in here the weekly pattern in here, as it has had quite a nice rhythmic motion, and these last three cycles you could see right in here pretty clearly, and a very, very poor rally. Got down here kind of mid-cycle and then tried to rally, but man, could not hold up there. And now this looks also like out towards October before they bottom. There's so many charts that I look at that have October bottoms in them that says, well, it's really likely that the stock market is going to continue down into October. So bounces aside, which was likely to be getting very, very soon. Now, let's take a look at the next one you asked me about, LinkedIn, LNKD. This one, nice chart, as it's got cycles within cycles. That's what really we're trying to show in here. And so we have this bigger one that's pointing down, and then the smaller one that, well, was rolling over. And we had the these blue lines drawn in here. And so this is the big cycle right here. This is the small one right in here that said rally and then sell off. So you've got two of these nesting over here, and that calls for another pretty sizable decline. We're going to look for LinkedIn to get down to around 170 or lower, and then have a much better period. I've loved this stock and loved this company, but once it had its breakdowns, well, then I just stay out of them, as when it broke down over here. Once it gets down over here into this area, that's really where I want to be a buyer, and I think it could be a great stock again. Great company in LinkedIn. I get an email from a JC who writes me, I'm new to options. My IRA, my broker, does not allow me to short trades, and wants to know, is it reasonable to buy ETF puts longer term out of the money, longer term about 2 or 3 points out of the money? Or what would your suggestions be? Well, first of all, I don't know a broker that will let you short in an IRA. Essentially, IRAs are supposed to be for investment, so they frown on shorting in IRAs because that's not investing, is it? The truth is that, you know, there are certainly a lot of ways to play the short side, and you brought one of them up. You want to buy long-term put options. Let's say 2-3 points out of the money in, you know, maybe spiders or something like that. You know, it's okay. I think that, you know, when you buy out of the money options, you have a negative pop. In other words, your probability of profitability is low. And that's, to me, always better to buy slightly in the money or in the money options. And that way you have less premium decay going on. So my suggestion is always to be buying in the 55 to 70 delta area. And that is, you know, based on the liquidity in the options that you're trying to trade. So, you know, if you're trading a real thick, you know, deeply traded option, then you know, it's okay maybe to be at a 55 volatility. I'm sorry, a 70% implied volatility, because there's plenty there to trade. But when it's really thin, you want to be cautious and maybe go for a lower amount of premium there, because you're going to have to give up some slippage probably to get the trades on. But overall, again, I don't really like buying out of the monies for when I talk about what the higher probability trades are. Truth is that I do some of that, and I've made some monstrous trades doing that also. So if you time it right, but holding that long stuff longer term like you want to do, not really the best approach. ML writes me, he says, SPX, you said 1925 was your downside target, and if that's broken, what does it mean? Do you still expect a rally? Well, on Thursday of this week, 1925 was broken kind of substantially, but then buyers came into the market, and there was a nice reversal in there. And truth is that it doesn't really change my scenario much. What it does change is the upside targets for a bounce, and because I don't really look at absolute numbers. I don't think that when you look at support resistance, it's important to look at absolute. That's why I always put zones on my chart. So breaking under 1925 and coming back, that's actually a good sign for buyers coming in sometime soon, and we're going to see that actually when I look at my short-term view of the coming week, and that's coming up right now.
Hi, I'm Epiphany, the askSlim spokesperson. Thanks for watching our weekly show, the askSlim Market Week. Grow your analytical skills, strategies, and confidence when you watch videos from these 6 categories in our member area. Futures Speak, in-depth analysis of 24 commodities and index features. Tools for Techs, featuring how-tos on many charting tools, often highlighting current trading and investment opportunities. Trader Psychology, in which Slim brings a holistic approach to trading, looking at many personal issues that can be obstacles to success. Stock Sectors, a look at stock groups and ETFs that may offer present opportunities. IRA MO, with ideas for longer-term approaches to your self-directed retirement accounts. Big picture analysis, a broader view of the major markets with perspectives on important tops or bottoms or ongoing longer-term momentum. So don't miss these great videos. Raise your probability of success by becoming a Level 2 member at www.askSlim.com/membership.
All right, this is our short-term view for the coming week, which turns out to be one of our very most popular segments that we do. What we do here is we look at, well, just the period just ahead, 4 to 7 days out, and what we're doing is taking the short-term charts, and all we're going to look at right now is the daily charts, and then factor in our analysis that we've done on the intermediate picture, usually in the weekly charts, and come up with scenarios in each of the 5 categories, really 6 if you count the VIX in, but the VIX is the inverse of the stock market. So so look at what our short-term views are in those 5 different market segments. What I always do is, of course, is look back to what I said in the last week, take an accounting of how I did, and basically I try to get, if I'm over 60%, I think I'm doing really, really well. As most analysts are probably 50-50 or worse, and if I get higher than that, well, I've done spectacularly well. And I would say that the last few weeks have been really good. This was a great week as far as the getting close on the way that I rank myself, which is basically a couple of things. It's my targets and how those targets worked, and the shape of what I think what the market's going to do during the week. So in the case of the stock market, like I thought it would fall early in the week till about midweek and then turn to the upside. I would call that perfect on shape. I thought it would move down to 1948 to 1925, and then find the support and move up. Well, it moved down below the 1925 number, but then closed that day at 1932. I would call that pretty perfect, as it then moved up the next day. So, and that would be like 100% on that particular call. So I would say that the only one I missed this week is gold. So it gives me an 80% plus on the week, which is one of the best weeks I've had. Getting to 90-100% is really, when you're looking at these short-term patterns, is very, very difficult. So 80%, pretty spectacular on the week, and I'll show you how that shaped up. So what I expected for the oil market was for it to be in a down week, but then get ready to move to the upside again. I thought it would test 43.44 and then get ready to move up to an area of 49 to 51. You can see that, well, it got down under 44 right here on the 8th day of the cycle. This was 7 days, this was 8 days, and this was 8 days. Beautiful cyclic action. Now likely making a bottom on this bigger cycle. That's this line that you can see right in here. For those of you that are chart subscribers and you're trying to make out what I have on here, that's this big blue cycle coming down right there, and that is turning up right now. So that's what I expected to happen. We got into the buy zone down over here. You could see that touching the support number right down over here, and now turning to the upside. This pattern looks like we're going to move up to that close to 50, might even be able to get up to 52 in the next few weeks. So we're going to call an up week on oil, and that it would likely get up to the first resistance. We're going to call it 48. So that's kind of what we're looking for in the next week, is a move up to 48. But then, as you could see, the pattern as it shapes up with the, let's say, 7 to 10 day cycles, it would be something like this and work its way up over the $50 number like that. That's the way the pattern sets up right now based on cyclical theory, and you can see that's worked pretty well here. So that is a look at light crude. The next one we're going to look at is gold /GC. Now we have a revision on this cycle pattern because we had a cycle that shortened up on us. So when we see that, well, we make the proper adjustment so that we can look forward in what we think is the proper rhythm in the market. So what we expect expected in gold was that it would chop sideways and then move down late in the week. Well, it did chop, but it got above our resistance area right there, which we talked about, the resistance and the 89-day moving average. So it popped through there. And when it finally did pull back, it only gets it to maybe up a few dollars on the week. But this is not what we called for. Essentially, what we expected to happen is this cycle right in here to look something like this here, test supports, and then get ready to move up again. So because of that big up day, we're going to penalize ourselves and say that that really didn't work for the week. And now what we're set up for is a small down week. We think that we're going to be in this correction right in here and give you a small down week. So we'll look for a pullback to 1133 to 1127 as a buy area, and that sets up this cycle. Now this is pushing up right here, and how do I know that? Well, I mean, we see this one pushing up and we have this big rally. Okay, so what we expect is the correction, but then this upside to stop it from getting down very far, get to support, and then move to the upside again. So we're looking for under 1133 and then potentially moving up to the 1160s in there, maybe even this resistance at 1170 before this short-term advancing period is over with. The long term, the intermediate term to longer term, is still not good. It's still negative in my mind, especially when you look at the GDX, the miners, and that is suggestive of the fact that rallies will not hold above this 1160, 1170 area. So that's what we're going to look for in the next week, is a small down week, and then get ready to move back to the upside in gold. Next one we're going to look at is the euro currency /6E. And this, what we had looked for in this week was a pullback to down under 112.45 to as low as 1160. That was this cycle right in here, and we actually got down to 111.16. So moved perfectly in the cyclical pattern that you see here. Now you'll notice that I have a projection in there, and that's what we do for our subscribers. And that says that what we're looking for, and I have this note right on my pad, is an arrow down and an arrow up, as that's what we expect. Early part of the week down, by midweek turning back to the upside. But you can see, I think it's only going to get into the resistance area right in here and then turn down again. We're just going to call this a small week because we're looking for down up right in here, but then after that the risks are going to mount. Now if you remember, we talked about the fact, you probably don't remember if you're not a subscriber, because this was in the subscriber area. We talked about a trade, short euro, long yen, which worked really, really nicely. And that trade is probably still going to be live in here, because this intermediate pattern is starting to turn down, and that's going to be, I think, reflective in the short-term pattern as this turns into a stair-step downward pattern right in here as the euro goes into a correction of the strong upside move that it had. So we're in an area of correction. We're going to look only for a small move on the upside in the euro after some early week decline, and not a very, very big move in there at all. So we're going to look now at the bond market. We're going to look at, sorry about that, ZN, which is the 10-year. Now, our expectation for the 10-year was that it was going to trade in a range. Now, the range that we said was around 128.08 at the top and 127.07 at the bottom. We actually tagged the low in there pretty closely, and then it got barely through our upside area right there and pulled back. So we said the range was going to be somewhere right in here, and that was almost perfectly spot on. Why did we call that? Well, we thought it was going to be a tight range because, well, we had this pattern right in here beginning to push up right in there, but it had come up to the resistance area already. So we thought that there was resistance in here and upside pressure in here was going to keep the pattern tight for this coming week. So what are we expecting for in the next week? Well, we think we're going to widen out the range a little bit. Why is that? Well, I think that if it widens out, it's going to be on the downside. This pattern right in here is the one that I'm looking at. It's a corrective pattern, and the first pattern in these bigger patterns that are right in here, this one and this one up here. What that brings is a small downside as it finishes this downside corrective piece and then gets ready to move on the upside. So we're going to call a range in here, and that range, probably somewhere around 126.08 at the top, maybe this support area at 126.30 on the bottom. And so we'll look for this kind of a choppy action in here for the next week, and then after that to move up again. Now this is opposite of what we expect in the stock market, as we expect a choppy week in there of an upside correction. Yes, corrections are on the upside also, and the stock market turning down again. So I'm going to show you that, and of course we're always looking at correlations here, and we have inverse correlation that holds up pretty well on a short-term basis when we look at the bond market versus the stock market. So we're going to look here at why we expect a bounce in the stock market, why we expected it to have a pullback last week, and then the situation looking forward, which, well, we'll call it not sweet. Here's the, we're going to put up the S&P chart here for you to see. We're going to look at SPX. Now, you'll notice that I put up commodities in almost everything except for the indexes. And the reason I do that is because, well, the indexes, when they roll, they start at a $10, $12 discount, and then they make up their discounts later on in the S&P's, much bigger discount, of course, in the NASDAQ. That throws the numbers off, and I want to have numbers that I can count on, and that's why I do my analysis on the SPX or the NDX, do those on the indexes versus doing them on the futures. So for those of you that have wondered, especially those people that are our subscribers for our charts, then that's the reason why. So here's the S&P 500. We're going to look at this last big cycle right in here, and that cycle is has been in a range right in here from this rebound area around around the 2012 area to this support area that comes right across over here, right near there. So that's the range we've been trading in. Now when we look at it cyclically, we're looking at the repeating rhythms in the market, and those are here: 14, 12, 13. Now this one did not make the low. We didn't expect it to because of the extreme move there. And then it rallied 11 days. That was a little longer than we expected, and then down to the 16th day. Of course, we had the Yom Kippur day in there, so wonder if that was just really an eliminated day, and that's the 16th day. And then we had a hammer bottom right there as it got underneath that support level and closed right up in the support zone. And then on Friday, the rally in here through the early part of the day as we're looking at this right now. And this is the pattern that we basically expected. Now, where are we right now? Well, we expect that somewhere like 12 to 15 days off of that bottom will be the next bottom. That's out over here in October. This big pattern on the weekly pattern is pushing down tremendously. That will make it very hard to get through this resistance zone that's in here. So the resistance zone shows up in this area of, let's say, 1964 is the first number, 1977 is the next number, and 1996 is the next number. This is the zone where I would expect it to stop, 1977 at the top, in a rebound in here. If it got crazy, it could get to the 1997 number. I have doubts about that. So what I expect is nothing like this 11-day rebound that we had from here to here. Usually when you get into this later aspect here, it's fewer days on the upside. So that would mean something like 3 to 5 days up in here, and then something like 2 weeks potential of big downside move in here, where we expect it to get below or to this number 1867 of that last low or lower in this period. So we pretty much had it nailed so far through almost every one of these moves for, well, a couple months. And now we're looking for a rally that comes and fails up in this area. And still have somewhere between 17 and 30 something points potential on the upside as I speak. That's a pretty good bounce that we could still get in there, but I think that will continue to fail. Now the VIX, VIX, we looked at last week, and the notation I have on my chart based on what I expected was a shape like this, and that's exactly what it did because we got the rally late in the week. I think there's a week or so of chop where it comes down a little bit right in here. Maybe it's 3-4 days, but then when we get into that period of big decline in the market again, we get into a period of big rally in the VIX, and that is suggestive of a move to 35 or 40 again before this big declining phase in the stock market is over with. So that's a look at everything that I look at and trade during the week. Give you a good sense for how I take the shorter term patterns, figure in those longer term patterns, and use that to help me get a sense, a feel. It's really about getting feel for the market. And I am working on a workshop that'll be several videos, a series of them on cyclical analysis. And if you want to be notified when that's ready, I believe it's at least 2 more months away because I have to finish writing it and then record everything. You can go to my website, and on the bottom of the front page there's a place to click on for the cycle workshop, and you just put your email address in there, and we'll let you know when that workshop is ready. Again, at least 2 months down the road because it's a lot of work to write that and to get it recorded. And that's it. Don't forget, send me your comments. Members can send them through their dashboard by hitting email Slim. And anybody else, any questions they have or comments, just send them to slim@askSlim.com. This has been it. It's a great fun and always great to bring you all of my work, and I hope that you find value in it. And I am always wishing you great trading.
Well, I'm going to the city and I'm going to